All right. Hello again, everybody. This is Mike Rixey. I am the lead options instructor for NetPicks, and this is our weekly options recap. Wanted to jump on here, talk you guys through what we're seeing here as we wrap up the week. We'll recap some of our trades that we were looking at this past week, and then also highlight some new potential trades that are presenting themselves for next week. So I'll walk you through some trades that we could potentially be taking over the next couple of trading days. As always, if you have any questions at all, feel free to type those in at any point during today's session. And if you're reviewing the recording here over the weekend, feel free to post a comment on the video or on the blog post, and I will get back with you right away. So let's start out by talk through market big picture. Let's start out with SPY. This is what we normally do with all of these sessions, just to kind of put some context around the market big picture. You can see here on this daily chart of SPY, we started the week off with a pretty impressive rally, right? Futures gapped up Monday morning. Big news out on the vaccine front. Markets rallied up to new all-time highs. We then spent the middle portion of the week just kind of chopping sideways. We had some decent range intraday, but not a lot of follow-through. We sold off throughout the day on Monday. We talked about that in Wednesday's midweek update. We sold off for most of the day on Monday, and then we've just kind of been sitting inside of this range. So what does that mean for us going into next week? How do we interpret this? Well, we're settling into more of a coiled spring pattern. We talked about this in previous sessions as well. We know that when markets get slow and choppy like this, we're just kind of building energy, right? Ideally, I would love to see a deeper pullback than this to build the energy, but we can still build it moving sideways. And out of this move, we'll start to get a breakout, either to the upside or to the downside. We'll just have to wait and see what happens. But building that energy will lead to a more sustainable move here over the next week or two. Now, we don't know in which direction we're going to head in. If we're going to break to the upside, I think my concern here is when we start to go through some of these individual charts and some of the key sectors in just a moment, you're going to see that we already have stocks at a very lofty price point here. We have a lot of overbought conditions. I'm not saying the market can't head higher. I just think it's going to be more difficult to get this thing to push up, back up to those highs without first getting a deeper pullback. And when I say deeper pullback, I talked about this on Wednesday. I would love at the very minimum to test the 8-period exponential moving average. It's that solid pink line. It's currently sitting at 351.40. That would be the first area of support that I'd expect the bulls to put up some defense at. So far, we really haven't seen any type of significant selling other than, Monday coming off of the highs. We've just kind of been moving sideways. So a pullback into the 8 EMA would be great. If we continue to push our way to the upside, I know we're going into a historically strong time of the year. Going into the holiday season, yes, we have the uncertainty out there with the COVID numbers picking up. That's certainly going to be a wild card that we'll have to keep a close eye on over the next few weeks. But if we continue to move back to the upside, the all-time high at 364.38 is our area of resistance. So we've got this big wide range between the all-time high and the 8 EMA. We could certainly see price action kind of bounce around inside of that range over the next week or two. How do we play that? I'll show you some of the charts that I'm looking at here in just a moment. I talked about it on Wednesday. I think the crucial piece here is to be as diversified as you possibly can, not only with the markets that you trade, but also with the strategies that you're using. Right? I want to have some bullish and bearish trades on. I'd also like to have some credit spreads on, more of a neutral type approach. The more we can mix it up, the better positioned we will be for whatever the market throws our way. Now, the volume, let's talk there. Over the past couple of weeks, we've had a lot of news, right? We had the elections, we had all of the COVID headlines hitting and so forth. And we saw a stretch there where volume, we had a number of sessions that we approached or even passed 100 million shares. It was very, very active. For this week, we have certainly seen volume start to contract here, right? And it's been a struggle over the past couple of days just to hit 50 million shares. There's not a lot of conviction here on this latest move over the past couple of days. I'd want to see volume pick back up and confirm the move if we do get a breakout. When I say pick up, I'd want to see us back into that 80 to 100 million share range. That's typically the range that we're looking at. It makes it easier to get fills, gives you more conviction and more staying power for any movement that we get. The range, the ATR, that's the average true range indicator down at the bottom. You can see that we have flipped over, other than Monday's open, we have seen the ATR start to contract here. Even though the market is still pretty active, an ATR of over 6, that indicates very good intraday range. It's a very active market, but it is trending lower. I want to see things stay active. I do not want to see us go back into just a one-way grind to the upside. That's no good. We want to stay active here. So I want to see, ideally, if we can get the ATR to continue to stay above 6, that'd be a good thing. More importantly, I don't want to see this continue downtrending here. I want to see this stabilize and have that range expand again. The VIX, volatility market-wide, the VIX, even though it's down $2 today, we're still above 20. We're at 23.26 on the VIX. That is historically a very high reading. We've been high for most of this year, just indicating the uncertainty that's there market-wide. When you get the VIX higher, the options are more expensive. Doesn't mean you can't buy options here, just means you're going to pay up for them. You need more to go right in your favor to make money. I continue to look at a fair amount of credit spreads here. Not only does it allow us to take advantage of the higher option prices, but it gives us a more forgiving trade. And in this market, like we just talked about, we're kind of in a coiled spring pattern, expecting a big move to come out of this choppiness. The credit spreads allow us to be more active and give us a higher probability trade. So I continue to look at a lot of credit spreads. I would say my split right now in my own personal trading, I would say I'm probably 75% credit spreads and 25% long calls, long puts. So it's very typical for me to be 2/3 credit spread, 1/3 long calls, long puts. So I'm not too far off from where I am historically. And that's just my personal preference. I love to use credit spreads. So again, just to summarize off the daily chart, 364.38 on SPY. That's our area of resistance on the upside. First area of support that we're looking at is the 8 EMA down at 351.36. The internals today, you take a look at the session, they're actually pretty darn good. 3-to-1 positive on the volume ratio on both the NYSE and the Nasdaq. So even though the volume is lighter overall today, well, volume we do have certainly favoring the upside. The advanced decline line on the Nasdaq plus 1,200, pretty good number. That's indicating pretty decent across the board buying in the Nasdaq today. It's not just strength in a couple of key tech stocks, because when you take a look, on the Nasdaq, you actually have Apple and Amazon negative. You also have Facebook slightly negative. So we actually have a decent advanced decline line number on the Nasdaq. Over on the NYSE, we're at plus 1,700. These are advanced decline line readings that are very typical of a pretty decent trending day. Not saying we can't reverse from here, but there's a lot of strength across many different sectors. It's going to be more of a challenge to get this thing to turn, especially going into a weekend. We had one plus 1,000 tick rating right at the open. We had one buy program right at the open. For the rest of the day, we've just been pinned between plus and minus 400 on the tick. What that means is we haven't had a lot of strong buy or sell programs all day, other than the first 15 minutes of the session. We've just kind of been in a drift mode. And when volume gets light and you get into that drift mode, you tend to see moves favor the upside. And that's exactly what we've seen so far today. It hasn't been a super strong move higher. It's just kind of been that drift to the upside. So heading into next week, just looking purely at price action, I think you still have to lean cautiously bullish here just because price action is hung in there. But when I start to take a look at some of these individual charts next, you'll see that we do have some overbought conditions that have developed here. So definitely seeing some signs of some tired markets here. Doesn't mean we have to turn immediately. It's just something to keep in mind. If we take a look at SPY, get rid of some of this text so it's easier to see. If we take a look at SPY, here's the messy chart. I mean, other than Monday's move, we did see an incredibly strong move on Monday, right? And we talked about that. We gapped higher, sold off, and we've just kind of been chopping sideways since. But on the 195-minute chart on SPY, you can see that we're in a pretty decent uptrend. We tried to test the 8 EMA yesterday. We actually tested it a couple of times this week. The 8 EMA is the red and blue line. We found support on that level a couple of times this week. No surprise. What I want to see happen, if we're going to get that deeper pullback, if we're going to see some selling going into next week, at the very minimum, I want to see the 8 EMA broken on a closing basis. That would potentially confirm that we could get some deeper moves to the downside. So I definitely want to see that line broken. But until that happens, I think you have to lean a little bullish here. No doubt about it. So as far as how I would play this, because the daily chart that I took a look at a few moments ago, I'm not using that for entry and exit points. I'm just using that daily chart to gauge overall market environment. It helps guide me in determining how aggressive I want to be with my trades that I'm taking. The 195-minute chart that we're looking at here on the screen, this is what's guiding my actual trade decisions, my entry and exit points. And on this chart of SPY, not really looking to initiate anything new here as far as long calls and long puts go. Price is already extended to the upside. Not really ideal for entering into new bullish positions here. If you're already bullish and in some long trades, that's fine. I don't have a problem holding, but this is not an area that is of interest to me for initiating new long call positions. Also, as I just mentioned, until that 8 EMA breaks on the downside, I'm also not interested in long puts either. So we're just kind of in a holding pattern. Could it be a potential candidate to sell some credit spreads? Sure, I'd be open there to potentially selling either some short call spreads or maybe an iron condor. But currently, I am flat any long option positions on SPY. Looking at QQQ, this is the Nasdaq ETF. Very similar story. Okay, if we take a look at the chart, get rid of some of these notes on the chart so it's not as distracting. Take a look. Other than the move early in the week, we've just kind of been pinned sideways. We are seeing, the Nasdaq up. The Nasdaq futures are up about 50 points on the session, but we've just kind of been moving sideways here, right around that 290 level. If you've traded the Nasdaq for any length of time, the Nasdaq does not like to stay quiet for long. Now that we've had 3 or 4 days in a row where we really haven't had a whole lot to speak of on QQQ, going into next week, I would expect the Nasdaq to be pretty active. I think it's going to present some opportunity here going into next week. Currently, if we take a look at our trend strength histogram down at the bottom, it has flipped from red to blue. It's been that way now for the last couple of weeks. We are in bullish mode. Price action did confirm the move to the upside. The red and blue line, again, is the 8 EMA. The white and yellow line is the 50-period exponential moving average. Price firmly above that level, and it did trigger long. Okay, unfortunately, we've just been kind of stuck right around that entry point. The entry point for us on the long side was at 289.29. The current trade that's in progress, the stop is down at 278.85. You can see the series of pink dots down there. That is my stop. So for the sake of this current trade that's in progress, sure, we'd like to see another wave to the upside. For better trading conditions going forward into the end of the year, I would like to see this thing roll back over. Even if I have to sacrifice a trade here and take a loser, I would much rather see a deeper pullback because I think it's going to give us better conditions for active trading here over the next couple of weeks, next couple of months. So we'll see what happens. Again, cautiously bullish going into next week, but that could change in a hurry. These trend strength readings, you can see my histogram down at the bottom. We're currently only sitting right around 1.47. That thing can flip in a hurry. If we see it flip below the 0 line, all of a sudden I flip from bullish to bearish mode. Not going to take much for that to happen going into next week. So definitely going to keep a close eye on the Nasdaq ETF, see if there's some potential for a new trade early in the week. Let's take a look at some of the Nasdaq names. Take a look at Microsoft. I talked about Microsoft on Wednesday. The potential was there for a long setup. It's still there. The reason it is a long setup, and it's this candle right here with the blue plus sign. The reason that is a long setup is our trend strength histogram down at the bottom went from red to blue. Okay, we went from bearish to bullish mode. Price action also confirmed by breaking up above the moving averages. This trade did trigger in. It is actually in a long setup. Okay, now, am I thrilled with the pattern? Again, you have to lean cautiously bullish. You're just based on price action alone. But I'm a little cautious here on the upside because we are so extended in some of these key areas. So what that means is if you see a long setup like this, our options are to either buy a long call, buy a call debit spread, or to sell an out of the money put spread. All three would be bullish trades. The most aggressive way to take the trade would just be to buy the outright calls. It's going to give you the most profit potential. It's also going to come with the most risk. The vertical spreads, on the other hand, are going to lower the cost of the trade, and they're also going to give you a higher probability of success. In exchange, you're going to give up some profit potential. So if you want it to be a little bit more conservative, potentially buying a call spread, selling a put spread. You can still lean bullish. You can still respect the system trade and price action on the chart. You can just do so in a more conservative way. Okay, so in this case, again, I mentioned earlier, I love to sell credit spreads. Given the choppiness that we've had in this market, I like time decay working in my favor. So I love if you're not in a trade here, I love the short put spread opportunity that's presenting itself if you wanted to lean bullish. All right, some of the other setups that I touched on some of these on Wednesday. Let's talk about AMAT. This is Applied Materials. It did have earnings out this week. Going into earnings, we were very overbought. I mentioned this chart on Wednesday. Instead of looking at the trend strength histogram down at the bottom, we're looking at our pulse histogram. It's the red, yellow, and green histogram. When it starts to plot green like it has here just recently, that indicates that price is between a 2 and a 3 standard deviation move on the upside. In other words, price is very, very overbought. It does not mean AMAT cannot move higher from here. It just means it's not statistically probable. The odds favor either a period of consolidation or a reversal to the downside. Look what price has done over the past week or so since those green pulse bars started plotting. See how price action just kind of gotten some noisy in here? We've gotten into some of this slower chop. That's a very typical pattern when you start to see extremes on the pulse. You start to hit those overbought extremes. So what is my interpretation of this? This would potentially present a short call spread opportunity. Selling an out of the money call spread would allow me to put on a neutral to bearish position. It would give me 5 ways of making money on the trade. And I'm going to walk you through how to set up the trade in just a moment. So I like the higher probability that the credit spread presents. It's also going to tie up less capital. So I'm going to walk you through how to place this trade here in just a moment. I'm actually going to show it to you in the Tastyworks platform today. I know in previous videos, I tend to show the Thinkorswim platform most often. I've had a lot of requests from people using Tastyworks. I love the Tastyworks platform as well. So I had some requests to show that one. So I'm going to pull that up now. So looks a little different from Tastyworks, but all the same functionality is there. So once we're inside of Tastyworks, up at the top, I'm going to click in the symbol box and I'm going to switch this from lift to AMAT. Down below, it's going to list all of the different expiration cycles that we have available to us. I talked about it on Wednesday. I have been trading a lot of December monthly options. Those are the ones with 35 days left to expiration. I like to be in the options that have between 20 and 40 days left to expiration in most cases. I also trade a lot of the monthly options because they tend to present better liquidity. They tend to have better volume and open interest. So what I'm going to do is take a look at the out of the money call options. The call options are on the left. The put options are on the right. Remember, I'm looking for a neutral to bearish position that would benefit from either a sideways consolidation or a reversal off of these overbought conditions that we're seeing. All right. So I'm going to go, the current price of the stock's at 71.55. I'm going to go to the 72.5 calls. I'm going to right click on those. Actually, I'm sorry. We're in Tastyworks, not Thinkorswim. So I'm going to go ahead and left click on the bid price of the 72.5 calls. As I left click on those 72.5 calls, it's going to box those in red, indicating a sell order. I am also going to left click on the 75 calls. I'm going to go further out of the money. I'm going to left click on the ask price of the 75 calls, and that's going to box those in green, indicating a buy order. All right. So down at the bottom, it summarizes the order. I'm selling the 72.5 call. STO stands for sell to open. I am buying the 75 call. BTO stands for buy to open. And in the middle here, it has the price. Okay. The price is currently sitting at 99 cents mid price. The mid price is just the mid price between the bid and ask. So does this trade meet my criteria? My goal on a credit spread is I want to collect between 30 and 40% of the width of the strikes. If we take a look at this, the strike prices of the options that we're trading here, there's a $2.50 difference between the 75 and the 72.5 calls. So if I collect 30% of that width, I want to collect between 75 cents and $1. That would give me 30 to 40% of the width of the strikes. This one's trading right around $1. Okay, so that's a pretty good number. Okay, it does fall into the criteria that I look for. If I hit confirm and or review and send, you'll see the order summarized here. All right, so if I go ahead and collect, and when I hit review and send, it actually bumped it up to $1. If I get filled at $1, I'm collecting $1 or $100 per spread. Okay, my risk, which is also going to be my buying power effect, is $152. This trade is going to tap $152 of capital per spread. That's the most I can lose on the trade. If I am dead wrong and AMAT continues to move to the upside, the most we can lose on the trade is $152. Why would I risk 152 to make 100? Because we are going to have 5 ways of making money on the position. I make money if the stock moves up, down, or sideways. It doesn't matter to me as long as price stays below 73.5. Where am I getting that number from? I'm taking the 72.5 call strike that I'm selling, and I'm adding on the $1 that I'm collecting on the trade. As long as price stays below 73.5, I can make money. It gives me right around just under a $2 cushion where I can be wrong. This is a neutral to bearish position. I ideally want it to move lower, but if it doesn't, I can still make money as long as price stays below 73.5. All right. I also make money if time decay adds up. Every day that passes, that helps me. And I also make money if volatility decreases. We already mentioned that volatility is high market wide. If we start to see that contract here, that would also potentially help me. So now I've got 5 routes to follow to make money on the position. Now, while I'm yapping away here, let's go ahead and take a look at the price. I should also point out that you can change the quantity down here in the lower left. Right now I have it set to 1 spread. If I click on the left and right arrows here, as I do, you'll notice the quantity will change. So I'm going to switch my quantity. We'll just, for our example here, we'll just use 3. Okay. So I'm going to go ahead and click on review and send. We're going to go ahead and send the order, and that order is now working. I know it's working for a few reasons. Number one, over on the left-hand side, you can see those W's. Those represent working orders on both the 72.5 and the 75 calls. I can also go over to my activity tab here on the left-hand side, and I can also see my order working right here. It's working at 99 cents. What does that mean? It just means my order's in place, but I have not been filled yet. If I wanted to come here, let's just say you take a look at this and you're saying, I want to get filled. I don't want to have to sit here and track the order. What you can do is adjust the price of the order. To do that, you would right click on your working order here and select replace order. Once you do that, it's going to take you back over to the trade page where you can now adjust the price of your order higher or lower. If I don't get filled at 99 cents, to increase my chances of getting filled, I am going to have to move my order price lower. Okay, the lower I move my price, the better chance I have of getting filled. But as I move that price lower, I'm also giving up some profit potential. So there's pros and cons here. With a credit spread, ideally, I like to place my orders and let the orders work. As long as my schedule allows that order to work a bit, if I don't get filled within the first 60 seconds, I am not going to immediately just change the order. Okay. Ideally, if I know I'm going to be in the office, I'm going to have access to my platform, I'll give it some time. I'd rather get filled at a good price than not at all. If your schedule doesn't allow it, you're saying, hey, Mike, I got to get back to work. I'm traveling here this afternoon for the weekend. If you wanted to increase your chances of getting filled, you can adjust the price lower. Adjust it from 99, maybe down to 97 cents. Adjust the price slowly. You don't have to sit there and make a huge adjustment. Adjust it by a penny or two. You'd be surprised at how big of a difference that makes just by adjusting the order by a penny or two. All right, so now let's see. Okay, we're still working at 99 cents. I'm going to replace the order. Let's see if we adjust it down to 98. We'll adjust it down to 97. We'll see if we can get filled here. All right, and there we go. We just got filled. So now if I come back over to my activity page, you can see that on AMAT, I was filled at 97 cents. I collected $97 per spread. That's the most I can make on the position. That's the max profit potential that I have on the trade. My profit target, how would I manage the trade? The 97 cents that I collected to put the trade on, that's the most I can make on the position. But I can only make that entire 97 cents if I hold it all the way to expiration. I'm not really looking to do that. I would rather close it out early. And my target is when I can buy the spread back and keep between 50 and 75% of the max profit potential. So if I take 50% of my max profit, it's right around 48 cents. I want to buy this spread back for between 24 and 48 cents. Over the next couple of weeks, if we can get AMAT to move lower, if I can buy it back for between 24 and 48 cents, that would be the ideal scenario. So because I know that, let's go ahead and go over to the positions tab, and you'll see AMAT popped up right here. So if I left click on AMAT, you'll see my position. I am short 3 of the 72.5 calls, and I'm long 3 of the 75 calls. To create a closing order here, I am going to hold down the shift button on my keyboard. And while I'm holding that down, I'm going to left click on both of the options. So they're highlighted in gray. Once they're highlighted in gray, I can right click on those, go to close, and select full. I want to close my full position. If I click on full, it's going to bring me back over to the trade page. And now I can adjust the price. Remember, I want to get filled between 24 and 48 cents. So I am going to change the price to 24 cents. The order type is a net debit. I sold the spread to open up the position. I need to buy it back to close it out. So anytime that you're buying, it's going to be done for a debit. I'm also going to change the time in force. TIF stands for time in force. Right now it's set to a day order. If I kept it as a day order, that order would cancel at the end of the day if I'm not filled. What I want to do is click on the drop-down menu and switch it to GTC, or good till cancel. Now, once it's set to good till cancel, I can click on review and send the order. Now, if I go over to my activity tab, you will see that I have a working order in place at 24 cents. Anytime over the next couple of weeks, if that spread trades for 24 cents, I'll potentially be filled there and I can book the profit. I like to have that working order in place for a target, just in case I get distracted, just in case I miss things. I want to have the potential there to get filled and book the profit. All right. So now I am good to go on AMAT. And that's exactly how I place the trade in Tastyworks. You can do the same thing in the mobile platform, not a problem. I trade from the mobile platform quite a bit. My iPhone is my best friend at times. So if you have any questions on the AMAT trade, let me know. Take a look at questions here. You're doing very good work. Well, I appreciate the feedback. Thank you very much. Glad you're finding it beneficial. If you have any questions on anything that we've covered so far, let me know. Let's go over to the charts again. I won't take that long to go through each one. I just wanted to go through an example. I had some questions on Tastyworks, so I just wanted to show you how we place the trades there. Let's talk about Etsy next. Symbol ETSY. Again, on the 195-minute chart, you can see our trend strength histogram did go red. We did get price action below the moving averages, and this one did trigger short here. The blue plus signs indicate our short entry point. 125.71 is the entry point. This potentially gives us a long put position. Okay, with our entry at 125.71, if we go back over to the trade page on Etsy, I'm going to stick with the December monthly options with 35 days left. With our entry at 125, just around the 125 level, I ideally like to go slightly in the money. In a perfect world, I'd like to be in the money on all of my long option positions. So I'm looking at the 130 puts. All I have to do to put an order on into the Tastyworks platform is to left click on the ask price of the 130 put. It boxes it in green. It creates an order down at the bottom. The quantity is set to 1. I'm buying 130 put. BTO stands for buy to open. We can change the price here. Again, with volatility high, market wide, these options, they're expensive. You're talking about almost $1,200 a contract. I don't mind that. It's just the situation that we're in right now. We're going out with the monthly options going out 35 days. The volatility is high. We're going to pay up for these. It's going to tie up more capital to put on a long put. It's also the most aggressive route to go. If I put on a long put, the only way I make money is if Etsy moves to the downside, and it does so relatively quickly. We just chop sideways, it's gonna take away some profit potential. That's why the credit spreads that we talked about earlier, they're more forgiving type trades because they give us 5 ways of making money on the position. But definitely looking at Etsy for a potential push to the downside going into next week. Baba definitely had some news out of China here this week. A lot of the Chinese tech stocks are very, very active. And in Baba's case, we got a very nice push to the downside. We are now oversold. How do I know that? Our pulse indicator plotted yellow and green again. We talked about the overbought condition here a few moments ago on AMAT. We're looking now at a very similar pattern, just in reverse. Now we're looking at an oversold condition on Baba. Price plotting green, or the bars plotting green on the pulse, indicate price between a 2 and a 3 standard deviation move on the downside. It doesn't mean Baba can't head lower from here. It just means it's not statistically probable. The odds favor either a period of consolidation or a bounce to the upside. Now, I get this question quite a bit. Mike, do I pay attention to news? Because the news has not been good for the Chinese stocks, right, this week. You've got to remember that what we're looking to do with our trades, our universe here, it's a very small universe of products that we trade. That's by design. We want to get to know the products that we trade. But more importantly, we're looking to see what happens for the next 3 to 30 days. That's what we classify a swing trade. What happens months from now does not matter to me. For me, it's just too hard to predict what's going to happen months from now. I think it's a lot easier to get a read on the market for the next couple of days, the next couple of weeks. So Baba, could it head lower from here? Sure. Going out a couple of months, we could very well see Baba lower. But in the near term, we're oversold, and I'm looking for a bounce higher in the near term. Okay, so how would we play that? You could potentially sell an out of the money put spread, just like we did on AMAT, looking to sell an out of the money spread, but in this case, we're using the out of the money puts. And ideally, we'd like to collect between 30 and 40% of the width of the strike. So everything we just talked about on Applied Materials, you can do over on Baba. You're just going to use the put options instead of the call options. Couple more that I had on my list from people asking questions on. So Facebook, kind of in no man's land here. Facebook, it's pretty unusual. You see all these blue plus signs on my chart, very typical of a choppy pattern. We're just pinned. Price action has been pinned between the 8 EMA and the 50 period EMA. That's a really tricky pattern to work with, right? Now we know Facebook doesn't like to stay quiet long. This is that coiled spring pattern that I talked about earlier. Out of this pattern, we will see a good move. We just don't know when price is going to break. So this one is definitely on my radar for next week. I do not have a Facebook position on, but I'm definitely looking for one going into next week. All right. So what would I look for here? Trend strength histogram down at the bottom is red. Bearish momentum is in control here, but barely. So in order for me to get short or to buy a long put, I'd want to see price break below the 50 EMA first. That's what I'm looking for going into next week. All right. So yeah, don't have a position on, but this is one that we'll reevaluate early next week when I jump back on for our midweek update on Wednesday. We'll take a look at this one in more detail. All right. Finally, I had some questions from a couple of our ETF option superstars clients. We put on an overnight trade on QQQ yesterday afternoon. This is what we call our overnight pop trade. These are trades that are looking to take advantage of overnight moves, the day before expiration, going into expiration day. And what we did yesterday afternoon, go back over to Thinkorswim here real quick, just easier to show there. What we did is we came in and utilized the November 13 weekly options. Those are the ones that expire this afternoon. We came in yesterday afternoon and we sold the 290, 292 call spread. What that means is we're selling the 290 call and we're buying the 292 call at the same time. The goal is for QQQ to stay below 290. If it does, we get to make money because as price moves lower, those call options are going to get cheaper. And the goal is to buy the spread back at a cheaper price than what we sold it for. We opened this spread yesterday for 60 cents. We collected 60 cents or $60 per spread to put the trade on. It tied up $140 of our capital. So very reasonable cost. And it gave us 5 ways of making money. We made money if QQQ moved up, down, or sideways, as long as it stayed below 290. We also made money from time decay adding up, which this close to expiration, time decay is extreme. And we make money from volatility decreasing. Earlier in the session, it wasn't a huge move, but let me go over to that 5-minute chart here a second and we'll zoom in. So the Nasdaq on this move to the upside, in the first hour to 90 minutes of the session, we had this move lower below 290. And in this stretch to the downside, wasn't huge, but we didn't need it to be. This close to expiration, the options are very reactive to changes in stock price. And we ended up closing out of the spread. We got filled on our side here this morning at 25 cents. There were some people that got filled at better pricing. Down the lowest price that I saw was 20 cents, which is great for those that got filled there. Us getting filled at 25 cents, it gave us $35 of profit per spread. And the question that came up here today, and I wanted to cover, if we were right, if QQQ stayed below 290, why not just hold? Why not hold all day and hopefully at the end of the day have price action below 290 and book the entire profit? Why buy it back for 25 cents? If the trade's moving in our favor, if it's doing what we need it to do, why not hold for the bigger profit? The problem that you run into when you're this close to expiration, the gamma is very, very extreme. The gamma indicates how quickly the options will react to changes in stock price. And when you get this close to expiration, any move against you is going to cause those options to change in value very quickly. We had a nice profit earlier. We were between 50 and 75% of our maximum profit potential. Had we held and price action reversed back to the upside, let's just say it rallies higher this afternoon and goes above 290, we could potentially go from 75% of our max profit to a loss in a matter of minutes. I don't want to do that for a few reasons. Number one, I'm going to have to sit there and watch it all day long to make sure price stays below 290. And then also my capital is tied up all day long. Okay, I don't want to tie up my capital and have additional risk when I can book the nice profit. If I can book between 50 and 75% of my max profit in the first 60 minutes of the session, book the profit, free up the capital, ring the register, and move on. That's what we have found gives us the best results. Are there times when the trade's going to continue to move in your favor and give you the big profit? Sure. But there's going to be way more cases where the trade ends up reversing in the other direction and you go from a profit to a loss. So what we have found is by closing those trades out early, booking 50 to 75% of my max profit, that's ideal. You're talking $35 a profit, which doesn't seem like a huge profit. But remember, I only tied up $140 to begin with. You put this trade on with 10 spreads or a position size of 10 spreads, all of a sudden you're talking about $350 a profit, tying up $1,400 of our capital, so still not extreme enough. $350 profit overnight, in and out in less than 24 hours. That adds up. That's a nice little boost to the profit, to the P&L going into the weekend. These are the types of trades that we like to look at going into expiration. On most stocks and ETFs, you're looking at Thursday afternoon into Friday for this setup to take advantage of the Friday expiration. SPY, the S&P 500 ETF, also has Monday and Wednesday expiration cycles. So we can also utilize this trade Friday afternoon into Monday expiration and then Tuesday afternoon into Wednesday expiration. So we do have some flexibility there with SPY. For those of you that might be interested in some additional details on how this setup works, okay, pretty attractive, right? When you can book some overnight profit like that, give yourself a nice little payday going into the weekend. Pretty nice. Well, I put a link up on the screen, netpicks.com/OPT. We are actually releasing what we're calling our overnight pop trades program this week. This program specializes in these overnight trades. That's all we do with the service. We send out between 2 and 3 trade recommendations each week with exact instructions on the trades that we're taking. We would love to have you join us. Some pretty incredible opportunities there between now and the end of the year. With the market so active, I think there's going to be a tremendous trading opportunity for us there. So the link there on the screen, it'll take you to a video that will show you more detail how the program works, what's included and so forth. So I would love to have you take a look. Give us some feedback. If you have any questions on that video, feel free to contact me directly. Mike@netpicks.com is the email address. If you have any questions on any topics that we covered today, any markets that we covered today, feel free to type those in now as well before we wrap up for the week. So I will be back again next week on Wednesday for our midweek update, and Friday as well, as we wrap up the week for our weekly recap. If you have any questions between now and then, we'd love to connect and help out. Again, Mike@netpicks.com. Feel free to contact me anytime. So I don't see any other questions coming in. So I'm going to start to wrap up here for the day and for the week. Enjoy your afternoon, everybody. Enjoy your weekend. And we'll talk to you guys here next week.